This podcast is for educational purposes only and is not financial advice. Welcome to the 15-Minute Investor. Today we're covering the pretty dramatic technical breakdown we're seeing in the market.
A big one.
Yeah, the SPY just lost a huge support level. So we're going to dig into the immediate danger zone at 670 and then jump into a preview for Micron Technology's earnings tonight.
And we'll finish with a quick update on a long-term favorite, Netflix.
Okay, so let's just get right into it. The broader market chaos, I mean, today felt like a confirmation of everything we've been tracking.
It really was. We lost a level that, a lot of technicians had marked as the absolute line in the sand.
It felt decisive.
That's the word for it. It was decisive. We saw the loss of that critical 681 level in the SPY.
And for anyone maybe new to this, SPY is the big one, the ETF that tracks the S&P 500.
Exactly. And losing 681, that wasn't just a little dip. That was the signal for what we call a potential flush.
A flush, so a rapid move down.
A very rapid acceleration downward. And the price action since then, it just confirms it.
It really does. Price is moving fast, kind of bouncing around 672 right now. And importantly, we're seeing an expansion candle to the downside.
Which means broad, aggressive selling. There's no significant buying interest stepping in yet to, defend the price.
Not at all.
So based on the charts, based on the velocity of this move, hitting 670 seems almost inevitable.
Tonight, you think? Or tomorrow morning?
Could be either post-market today or pre-market tomorrow. But here's the key insight for you, the listener. 670 is not just the next stop.
It's more than that.
It is the existential pivot point for the entire near-term market outlook.
I like that phrase, existential pivot point. So for the rest of this week, heading into the new year, it's all about that one number.
Everything rests on how the market handles 670.
Okay, so let's break down the two scenarios. What happens if it fails?
If we fail, it could get dramatic. The most bearish scenario is if the price just cuts through 670 like a knife.
With no bounce.
Zero bounce? If we don't get a meaningful defense there, that confirms we're not just in a simple correction anymore. We could be entering a period of real structural damage.
Damage that could define the rest of the year.
Exactly.
So what does structural damage look like in terms of price? Where do we go if 670 doesn't hold?
The next major support area on the chart is down around 650.
Wow. Okay.
But, and this is important context, even a drop to 650, as painful as it would be, still keeps us trading inside that October price window.
Right. The October pivot low was around 651, and the high was 688.
Precisely.
Yeah.
So the deepest, darkest scenario for the next few weeks is really just a return to the bottom of that range.
That helps ground the fear a bit. It's a big drop, but there's a historical floor there. Now let's flip it. What about the bull case? What does a successful defense of 670 look like?
It needs high conviction. We have to see serious money, what we call strong volume nodes, stepping in right at 670.
And volume nodes are just areas with a lot of past trading activity, right?
Mm-hmm.
A historical foundation.
You got it. So if price hits 670 and we see a big convincing bounce on high volume, that would immediately put a year-end melt-up back on the table.
The Santa Claus rally everyone's hoping for.
Which, for anyone curious, is usually a low-volume drift higher in the last few days of December and the first couple of January.
Okay, so if we hold 670, are there any patterns we should watch for?
Well, you might see the setup for a potential inverse head and shoulders pattern.
Which is a classic reversal signal.
It is, though you'd prefer to see it at the bottom of a much bigger move, not the top. But look, just holding 670 through Friday significantly raises the odds we drift back up toward that 688 October high.
And 688 becomes the new ceiling to break through.
That's the long-term price to beat. If the market can reclaim 688, then the path is wide open for a new all-time high. Maybe even a push to 700 before 2025 is over.
But first things first.
First things first. Every single investor's focus needs to be locked on that 670 level.
Okay, a very clear map for the macro picture. Now, this is where it gets really interesting because this kind of market stress, it forces people to look for individual stocks with their own stories.
Exactly. And tonight, all eyes are on a Micron Technology, ticker MU, reporting earnings after the bell.
Micron has been an absolute monster this year.
It's been the story of 2025 in tech. It's the fifth strongest stock in the S&P 500, up an incredible 176% this year.
But it has cooled off a little bit recently.
It has pulled back about 17% from its peak, mostly profit-taking after a run like that. But that pullback is actually what makes the valuation case so compelling right now.
Okay, let's dive into that. The fundamentals.
Yeah.
Why is the argument for MU so bullish, especially when you compare it to other, high-flying AI stocks?
It's all about its valuation disconnect. Micron makes high bandwidth memory, HBM, which is absolutely essential for training the biggest AI
Some
models.
KLMs, right?
Right, the demand is just exploding. But the market is still sort of treating MU like an old school cyclical memory chip company.
And you see that reflected in its PE ratio.
You see it clear as day. MU has one of the cheapest forward PE ratios among the big AI stocks. It's sitting at just 11.
And its peers.
Most of its peers are trading somewhere between 25 and 30. So the big question, the insight for you, is whether the market is about to re-rate this stock.
From a cyclical company to a core AI growth driver.
And if it does, the upside is just tremendous. That's why you have analysts at places like NEM and Wedbush setting these wild price targets of $300.
That valuation gap is a huge opportunity, assuming they deliver tonight. So what are the technical triggers we're watching for tomorrow?
So the recent pullback has brought the price right down into what technicians call the golden zone, a high probability area for a reversal.
So for the listener, when we talk about Fibonacci levels, we're just talking about key mathematical lines that often act as support or resistance.
Exactly. And the key upside trigger here is a move back above $228.57.
And that's not a random number.
Not at all. It lines up perfectly with a 382 Fibonacci level and the middle of its ascending channel. If it clears 228.57, the next target is immediately 237, maybe even 240.
And what's the risk level, the capitulation point?
That would be a move down to 208. That's the floor. If we breach 208, the stock could be in for a much deeper correction.
It's also worth noting the institutional money flow.
Oh, absolutely. We
Yeah.
saw $38 million in call sweeps pour into the $200 strike options expiring next week.
Which is a huge, aggressive bet on a positive outcome.
It's the smart money signaling they believe in the bounce.
Okay, great breakdown. Let's pivot from Micron to another big one we've been tracking for the long term, Netflix. Ticker NFLX.
Our long-term conviction on Netflix remains exceptionally strong. We're looking well into 2026. Our ultimate price target is $150.
Which would be a decisive move past its old all-time highs around 134.
A very decisive move.
Now, before we get into the chart, let's just clarify the fundamental story. There was some confusion in early analysis about a massive debt load from acquiring Warner Brothers and HBO.
Right, let's correct that narrative. Netflix did not purchase Warner Brothers or HBO.
So what brought the stock down from its highs then?
It was market fear. Fear of streaming saturation, a ton of new competition from Disney Plus, Max, and a real slowdown in subscriber growth. The market basically priced in a severe deceleration.
So the bullish case for a 150 isn't about an acquisition paying off, it's about an operational turnaround.
It's about two huge operational wins. First, the ad-supported peer has been wildly successful, a massive new revenue stream everyone was skeptical about.
And second,
The global crackdown on password sharing. It successfully converted millions of borrowers into actual paying subscribers.
so those two moves fundamentally re-rated the stock.
They prove the company can still grow revenue and margin even in a crowded market.
Okay, that makes sense for the long-term target. Now, looking at the chart recently, it hit that 78 fib level and has been building a nice base above it.
That's right. It's been grinding higher, making a series of higher lows and higher highs, moving from about 92 up toward 97.
But it's hitting a bit of a wall there.
Yeah, it's consolidating right now, facing resistance between 94 and 97. But this is healthy consolidation.
So we still think the immediate target of 102 is valid.
Oh yeah, 102 is the immediate short-term hurdle. But, and this is critical for you, the learner, since this isn't an overnight earnings play, risk management is everything.
Let's nail that down. A long-term idea still needs a stop loss, especially with the market acting the way it is. What's the safety level?
The stop loss is very clearly defined below $93.32.
And why that price?
It's the low of the last significant green accumulation candle. If the price fails there, it signals a deeper correction is coming, and you want to protect your capital.
Right, regardless of that long-term 150 target.
You have to maintain discipline. Respect that floor.
Fantastic. Okay, let's synthesize all this. Let's give our listeners the key takeaways they need.
All right, we covered three distinct areas. Let's boil it down.
Lay them on us.
Takeaway number one for the SPY. The most critical technical level for the whole market right now is 670. Holding it with strong volume means the Santa Claus rally could still happen.
And if it fails?
If it fails, an extended dip towards 650 is the next inevitable target.
Okay. Takeaway number two for Micron.
The Micron valuation. It presents a deep value case in the AI space. That 17% pullback is interesting because its forward PE is just 11.
Which is way cheaper than its peers at 25 to 30.
Exactly. It's all about the potential re-rating based on HBM demand.
Takeaway 3, the actual MU triggers.
For Micron, post-earnings, the upside trigger is 228.57, targeting 237 to 240. The capitulation risk, that floor, is down at 208.
And institutional money is betting on the upside.
Very bullishly, yes.
And finally, takeaway 4 for Netflix.
Netflix risk management. The long-term outlook is bullish toward 150 thanks to the ad tier and password crackdowns. But short-term traders absolutely must use a stop loss below $93.32 while they target that break of 102.
So I have a plan.
You have to. Ultimately, you have to remember that the price action is the ultimate truth, no matter what you hope for long-term.
That is a powerful note to end on. Keep tracking those charts and know your triggers before the bell tomorrow. We'll be back soon to analyze some upcoming reports.
Yeah, we've got Nike and FedEx reporting on Thursday. That'll give us some fresh insights into consumer spending and global logistics.
Always more volatility, always more opportunity. Thanks for listening to the 15-Minute Investor.